Hi everyone. Sounds good. Hi and welcome to Harvard Center for International Development's Friday speaker series. My name is Eric Dalker. I'm a sophomore at the college studying government and modern Middle East studies. And I'm also one of the CID student ambassadors. As you all know, or as many of you know, CID's mission is to build a thriving world for all. CID does this by working across Harvard and by global networks of practitioners and academics, building international pools of talent and helping them deploy breakthrough research that addresses the pressing challenges today. One person that truly embodies this spirit of CID is today's guest speaker, Nisha Biswal, who has come today to talk about U.S. leadership in development finance, leveraging private capital to reach SDG goals. Prior to that, I just wanted to do some housekeeping. Enjoy the lunch. It's all everything you're eating from today is decomposable, so please help us throw it away in the decompose afterwards. Also, the event today is being recorded, but it will only be the speaker was recorded, and there's also going to be CID staff taking some photos. So please, if anyone's uncomfortable with that, let them know. Lastly, many of you probably are this already, but please sign up to the CID newsletter and engage through social media, LinkedIn, Instagram to stay engaged with the CID community and be upcoming events. So before Nisha Biswal takes the stage, I would like to quickly give an introduction. She is the Deputy Chief Executive Officer of the U.S. International Development Finance Corporation. She brings over 30 years of experience in U.S. foreign policy and international development programs, including in the executive branch, Congress, and the private sector. Prior to joining DFC, she has served as Senior Vice President for International Strategy and Global Initiatives at the U.S. Chamber of Commerce and oversaw the U.S. India Business Council and the U.S. Bangladesh and Business Council. I could go on and on this list. It's done a lot of amazing stuff in the interdependence with the U.S. government and international development and finance. But instead of having me talking, please join me in welcoming Nisha Biswal to take the stage.
Thank you so much, Eric. I always fear when people read off my bio, my resume. It looks like I can't hold a job because I've moved around so much across government. But in fact, what that career has given me the opportunity to do is look at a set of issues and problems from a variety of different perspectives and actually think about how do we develop a systems mindset and approach to problem solving. But I digress. I'm really excited to be here today, and it's great to be here particularly. I know she stepped out of the room to go retrieve my daughter, but particularly to be here at the invitation of Fatima Samar, who I have worked with in government for a number of years and in a number of different capacities. And one thing I love about Fatima is not only does she talk very fast, which I know you guys all know about her by now, she thinks fast and she acts fast. And I got her fast. And you got her fast. And she is impatient to get results. She did that when she was at the State Department. She did that when she was on Hill. She did that when she was at MCC, and, sometimes government moves at a glacial pace. So having a force like her pushing everybody to break through that glacial pace has been fantastic. So Kennedy School has been a really important partner for the DFC, and we're going to talk a little bit later on about how we continue that incredible pipeline of talent that comes from here and finds a home in the government, in public service, and certainly at DFC. And Lucy Cunningham is here, who is our managing director on human resources, who oversees all of our recruitment efforts, etc. So for those of you who are interested, please feel free to catch up with her. And as I mentioned, my daughter's here, and she took advantage of the fact that I was coming up for this talk to also sign for a campus tour, because she's a senior in high school right now who's going through that application process. So DFC, we are really the newest U.S. government agency. We were established about 5 years ago, 6 years ago in 2018, Congress passed the Build Act. And I'm not quite sure what I'm supposed to do with this. Maybe press right. Maybe somebody else can take this on. This is not anyways, I do have a couple of slides, not too many, but if someone wants to figure out this, and then we have copies of the slides in case I don't. Thank you. I can't multitask as you might. But we were established through the Build Act. Our predecessor agency was the Overseas Private Investment Corporation, which some of you may be familiar with. Next slide. So DFC in 2018, in the face of one, big deficits in infrastructure finance, development finance globally, two, surging tools and investments coming from some of our strategic competitors in ways that made, from a strategic perspective, made folks a little bit nervous. Three, kind of recognizing that increasingly ODA was not going to meet the needs. Congress passed the Build Act, which established the Development Finance Corporation. And so, as DFC, our mission is to really leverage private sector tools, mobilize private capital to solve development challenges and align with U.S. foreign policy goals. And we have a predominant focus in low-income and lower-middle-income countries. We have a maximum contingent liability, our lending cap, so to speak, at 60 billion, though we're in the process of reauthorization, and we expect that to double. So that's a pretty healthy balance sheet. And we focus on high standards in how we diligence and approve projects. One of the exciting changes that I have seen in government, and that is modified and simplified at DFC, is a very interagency and also interagency collaboration and also partnership across DFIs, across international partners. So we work very closely with USAID and the State Department, who our state is the chair of our board, USAID is the vice chair. But we also work very closely with MCC, the Millennium Challenge Corporation, the Exim Bank, USTBA, and a host of others, because we're in this moment where no single agency, and frankly, no single government entity has the ability to meet the challenges that we see around the world. And so we have to work more effectively, efficiently, and in partnership. And so DFC tries to model that quite a bit in how we do business. And in fact, we do a lot of our business is with USAID, where we do the blended finance and the continuum from grant to then debt with some of the partners that we work with. Next slide. Yes, thank you. So we are global. We are a global entity. We work in every region. We have, as of the end of the fiscal year, we did 12 billion in financing just in the past fiscal year alone, across 180 projects, and we're present around the world. 73% of our projects are in low-income and low-middle-income countries, and over half of our projects by dollar value are in low-income and low-middle-income countries. But we are in middle-income countries, and we also do some work in certain high-income countries around energy security as a consequence of the Russian invasion in Ukraine and the impact on energy security. Almost half of our investments are through small businesses and entrepreneurs and are under 10 million in volume. Though at the high end are projects that we're financing at up to $1 billion. Those tend to be either large infrastructure or political risk insurance and debt swaps that are at the high end. And we're aligned around next slide, and we're aligned around a set of core priorities and sectors, including infrastructure, which includes ICT, telecom, critical minerals, and water sanitation, around energy, including predominant focus on clean energy, health, food security and agriculture, and as I mentioned earlier, support for small businesses and financial services. We have two cost-cutting priorities that inform all of our sectors, and that is on climate and inclusion. We bring a climate lens across all of our sectors, and we make sure that we're building financial inclusion for women and underserved populations in how the projects are designed. Our tools, these are our sectors. Our tools are, so even as OBIC, we had debt financing, which is loans and loan guarantees. And we had political risk insurance and war insurance. In the Build Act, we added to those tools. We have we have equity, both through funds and direct equity into projects. And we have technical assistance. And I'm going to talk, I wanted to race through these slides because I want to spend the bulk of my time talking to you about how we use these tools to meet SDGs and also the moment that we're in around development finance. So these are our tool sets. Last slide is impact. How do we use and deploy these tools? We have developed an impact score and an impact assessment mechanism that aligns with the SDGs. We develop an IQ score around each project that we're reviewing. And we look at the SDGs. We, I think, have 16 of the 17 SDGs as foundational for how we assess impact. And we look at impact quotient metric that looks at the economic growth, the innovation, and the inclusion as kind of the key pillars around that. We also have a very rigorous ESIA diligencing process to make sure that we are understanding what the environmental and social impacts of these projects are, that we are not making things worse, that we're looking at human rights, labor, we're looking at governance issues, we're looking at, you know, as I said, the environmental impacts, community impacts, displacement, etc. So a complex process of diligencing before we get to a financing. And fundamentally, through the Build Act, we created kind of this dual mandate of advancing development impact and aligning with U.S. foreign policy. So that's kind of DFC 101, as we like to say. What does that mean? How do we use these tools to essentially meet the moment, as I like to say, to advance the SDGs, to address some of the big global challenges that we see in the world today? First of all, on SDGs, you know, we're, I think, the only U.S. government agency right now that has its impact scoring aligned specifically to the SDGs. And so we're in that way a pathbreaker, even in the USG, to really fundamentally orient our work around SDGs. 61% of all of our transactions advance SDG 1, which calls for ending poverty, 77%. SDG 9 focused on building sustainable infrastructure, and 87% of all transactions advance SDG 10 for reducing inequality. So, you know, we're continuing to develop that even further and go deeper, but how does that manifest in terms of what are we doing with these funds and how is it moving the needle, so to speak? So let's talk about health. And you can turn this off because I'm done with the slides. In health, we are very focused on not repeating the mistakes of the last pandemic. COVID exposed so many gaps in our global health system: unequal access to vaccines, therapeutics, diagnostics, other medical countermeasures that left people in developing countries very highly vulnerable. Health systems stretched very thin from addressing these persistent infectious diseases, rising non-communicable and chronic diseases, everything from the last pandemic to the current outbreak of Mpox, and a massive funding gap. Funding gap for health, for the health SDGs was $134 billion before COVID, and even more so now. So what has DFC done? We've supported nearly $2 billion in investments in health, over 25 projects in specific concrete areas like investing in vaccine manufacturing in South America, in Africa, in various parts of Asia, looking at other non-vaccine needs like medical oxygen production in Africa, like investing in diagnostics and other areas, as well as in health systems, primary health care, as well as looking at some more advanced healthcare. But what is, I think, a game changer in the health space is we started looking at how do we deal with this liquidity issue on how we deal with pandemics, because pledges to Gavi and to WHO or Africa CDC or others, they're slow to come in. It takes a long time for these institutions to actually access the capital they need to do a rapid response. So last year, we established a liquidity facility, a line of credit, $1 billion for Gavi global, that they can call upon so that if there is an outbreak, even before the pledges come in, they can access that line of credit to mobilize their response. This inspired, similar actions from, for example, BII also did a $1 billion credit facility to Gavi. This year at UNGA, the G7 DFIs all got together and announced a medical countermeasures surge financing, which means that we are putting in place the systems to look not only at vaccine delivery, but also vaccine manufacturing, diagnostics capacities, and other areas that might need governments to move in quickly and bring capital in a really rapid way in the face of an outbreak. And we're already deploying some of that in the Mpox outbreak. We've done a lot on debt for impact, focusing on climate. I'm going to talk about that in a second. But now we're talking to our partners around debt for health swaps, where we go in and help restructure and through our political risk insurance kind of guarantee around a debt restructuring, and then use the savings to support major health outcomes. This is how we're mobilizing new funds to meet the shortfall, the gaps in health financing that we're seeing around the world. Climate. So we mobilized in 23, or committed 3.7 billion in climate clean energy financing. And I think we're going to do some similar amount in the FY24, though we don't have the total tabulations just yet. But again, moving beyond direct financing of renewable energy projects, we're starting to think about this from an entire ecosystem and value chain perspective. So how do we make sure that we're addressing some of the supply chain bottlenecks in the clean energy space? I just did a roundtable 2-3 weeks ago in India around clean energy manufacturing to say, hey, we want to double down on investing in diversifying that manufacturing ecosystem. And we've funded 2 big projects in India on solar manufacturing with First Solar and Tata Power for solar manufacturing in India, but we want to expand that to wind, looking in other areas like green hydrogen, looking at cooling as we get more and more high temperatures, more and more countries, particularly developing countries, are struggling with cooling issues, refrigeration and air conditioning. How do you do that in an energy efficient and sustainable way? What are the breakthrough technologies and how do we bring them at scale in an affordable way? And so we're looking at how we invest in that space. And then we're looking kind of way upstream as we think about, we can't support a clean energy transition around the world without looking at the critical minerals that are going to be necessary. And how do we diversify the production and processing of critical minerals, 80% of which right now are controlled by a single country. And how do we break through that bottleneck? So we're investing a lot in mineral mining and processing in Africa, in South America, and Asia. And thinking about how do you raise the bar on what mining looks like today, right? Because the mining space is one that DFI has tried to avoid for a very long time because it was fraught with risk, with abuse, with lack of transparency, with corruption. And we want to make sure that as we're thinking about that clean energy transition, that investing in mining becomes actually a positive impact in the communities in which those mines are located, for the workers who are working in those mines, and for the customers or consumers who are using those products. So there's a lot of thought going into kind of mining as a service, which essentially brings more transparency into that. So this is another area that DFC is looking very hard at, both in how we look at individual projects, but also as I said, at that ecosystem. And food and agriculture is the last kind of subject area focus that I want to talk about, though we can mention a little bit on infrastructure and energy as well. So food security and agriculture, we all know that the conflict between Russia and Ukraine has had a dramatic impact globally on food security, has pushed more countries into food insecurity and vulnerability, and has impacted on malnutrition and stunting. And yet the resources available, again, are insufficient to meet the need. So we're looking at a number of different things. One, what can we do to support agricultural production, investing in countries that are exporters, as well as countries that are importers across the entire ecosystem, looking at fertilizer inputs, invested in a fertilizer factory in Nigeria, for example, looking at access to credit for farmers so that they can actually have the resources necessary to support and grow their farms, working with innovative partnerships like with MasterCard and the African Development Bank on a community pass and MAID Alliance, where they create the digital infrastructure for the farmers. We, through our loan guarantees and loans to African banks, create the access to credit so that farmers can then be able to pull down those resources to be able to buy their seeds or their inputs. But also looking at, food processing and looking at the larger kind of ecosystem so that as we invest in transportation, for example, the Lobito corridor, which is transportation investments that connect pit to port, connect the mining sector to the port sector, and make that whole system efficient, that we're also thinking about investing in the communities and the businesses around those corridors, so that we're looking at how investing in food processing, investing in farmers, can support a larger impact of that economic corridor. So that it's not just a transportation corridor, it's truly an economic corridor. So this is kind of the ways in which we're starting to think about the development challenges that we're seeing and deploying a suite of tools that work together, working closely with our partners in government. Oftentimes, like the food processing, a project will start with USAID's technical support and grant assistance, and then they'll come to us and say, hey, this is growing, I think they're ready to take on debt, and then we'll do a small loan, a $10 million, $20 million loan that really helps them build that business, scale it, and be able to kind of advance that. Thank you. I actually have one of you and I forgot. So, and then we're trying to work across a DFI ecosystem. How do we make sure that rather than competing for bankable projects, which is kind of what sometimes has characterized how DFI is showing, it's a race to see who's going to get this really cool, sexy project that meets all of these different requirements. And rather than doing that, working together to say, how do we create more bankable projects? How do we use our project prep facilities? How do we use our co-financing mechanisms? So we're doing that, for example, with IDB Invest in Western Hemisphere, where we've created a joint initiative to support infrastructure in Western Hemisphere. And we've created a TA facility to specifically support technical assistance to those joint projects. And then we've created a pipeline sharing mechanism so that we can actually trade data about what they're looking at that we might be able to go in as an investor on, what we're looking at that they might be able to come in on, or where our tools complement each other. If IDB Invest is doing the debt financing, maybe we can come in with affordable risk insurance to support that, because we're one of the few bilateral DFIs that actually have political risk insurance. So we're trying to leverage our tools to get a better and bigger impact so that we're showing up in more collective co-financing with European DFIs across Africa. Certainly in Ukraine, we're working very closely with EBRD, EIB, the European Investment Bank, and some of the bilateral DFIs, and kind of thinking about supporting reconstruction and economic stabilization in Ukraine. And we're working creatively with the multilaterals, with the World Bank, with IFC, with MIGA, with the African Development Bank, Asian Development Bank, et cetera, in trying to think about how we leverage a suite of tools. You know, I was in Philippines earlier this year, and we had a meeting around the Luzon corridor and the desire to kind of create a scale of infrastructure investment to really take that whole Subic Bay region and create an economic infrastructure economic corridor there. So that kind of is the approach that we're bringing, and we're in a moment where these tools are more necessary than ever, because the gaps in public financing for infrastructure, the gaps in public financing for SDGs is larger than ever. Countries are falling back in their ability to meet the SDG targets. And the UN Secretary General and the World Bank President have come in and said, this is not going to get done on the back of ODA by itself. We've got to mobilize private sector tools and private sector resources. And that's where the DFIs come in. We are the vehicle through which we can leverage and scale with private resources, including private technology, private capability. I thought maybe with that, we would turn this conversation into a little bit more interactive and kind of understand a little bit what we were talking about. But I do want to say it's a really exciting time to be in development finance, and we need brilliant minds and passionate people to come in and work with us. And so Lucy Cunningham is here with us, and we're going to have a later conversation about career opportunities as well. Eric, I want to maybe turn this into a more interactive space.
Yeah, so let's get on with the Q&A. Perhaps I could ask a question to get us started, and people can prepare some more questions. I thought it was very interesting what you said about the mineral mining, and you said it's historically quite a difficult sector to invest in. Could you perhaps elaborate a bit more on how you guys have gone into that and ensure that it's done in a sustainable way?
Yeah, and I will just say, this is still very much work in progress, right? But you know, for decades, we always talked about kind of the resource curse, right? Which is that countries that had these incredible deposits of mineral resources, that the cultivation, production of those resources was not done in a very transparent way, and the benefits were not done in a very inclusive way, so that the communities never felt like they saw any benefit from it. I think the moment that we're in, where the energy transition that the world needs is not possible without a significant scale up in the production and processing of critical minerals, combined with a increasing demand signal from governments across Africa and Latin America, that they want to see the production and processing of these minerals lead to broad-based economic growth and economic opportunity for their people. And the fact that these minerals are then going into consumer products that have very strong value orientation. You know, if you're buying an electric vehicle, you care about the planet, but if you care about the planet, you also care about the people on the planet. And that creates an opportunity to then really rethink how we're looking at minerals and a country's mineral wealth, and how we're looking at investing in those minerals with much more sourceability, traceability of where your products are coming from. A lot of the EV manufacturers are having direct negotiations with mines to secure supplies. Now that means that you can't feign ignorance about what may be happening in a mine, because you don't know where your critical minerals are coming from that are going into your EV batteries. Then you have much more responsibility to be diligencing, right? So I think it's creating a moment in this ecosystem where mining companies and their consumers are working together to actually install better governance. I will try to make my answers shorter because I see the hands.
A lot of questions, yeah.
And if you want.
Yeah, let's do a round of 3 questions.
First of all, thank you for being here. I had a very quick follow-up on the mining point. I think I understand the role of development finance institutions in funding projects that would not happen kind of but for underwriting the risk or something from the public sector. My understanding of the minerals case is that there's massive private sector interest there because of the anticipated demand. So I'm just wondering about what the role is, what the value to private developers is of working with the U.S. government, if that's sort of strategic alignment, or if it's a case where the states or the nations themselves are kind of preferring public involvement with the U.S.
Okay.
Just a follow-up on
Somebody
this.
keep track of some of these questions in case I forget.
It's a similar point, I guess, on U.S. interventionism and how do you balance that, given that you're almost like a U.S. entity in a way. You are actually a U.S. entity, and balancing that with interest of the nations that you're actually working with, because it can be seen as almost exporting your ideals.
Yeah, introduce yourself as well.
Hi, I'm Brenda. Thank you so much for your speech. I think, I guess somewhat related, but I was wondering, on what basis do you decide which tool to use? I mean, you talked about debt swaps, things like that. Does it depend on which industry you're going to, which country you're working with, and how is working with this organization different for a country, for example, an African South Asian country, different? How is it different to take a loan from this organization rather than other options available outside, and how might a country gauge that?
That's great. That's great questions. Why don't we take these three and then we'll come back around. So why DFI financing is needed in the mining sector? Private equity could go in. First of all, the majors don't fund exploration. Where they have an established mine that is already producing, they will scale it. And so kind of the small miners don't have the balance sheet to actually finance their exploration. Private equity would be interested, but there's a lot of volatility. So, let's be candid. 80% of processing and production right now is under PRC control. And there's not necessarily a lot of openness to having new actors and, non-PRC based supply chains in the mining space. So there is price volatility. There's volatility in the EV demand market. So in the short term, the prospects of investing in new mines is actually quite dicey. DFIs are bringing patient capital that stabilizes the market, that says, we're putting a stake in this because of the long-term demand. We know the economics will work out in the long term, so we'll put the patient capital in, and that allows then for some greater stability in that. So that's kind of the case for why development finance in this space. And then also we bring the high standards. The fact that we go in and diligence a mine makes it safe for private investment to follow. So those are the two cases. How do we work with governments, and how do we guard against interventionism versus what are government priorities? So it's a balance. DFC is a private sector. We don't do sovereign lending, though we sometimes work with sovereign state-owned enterprises and sovereign funds in co-investing and project management. But we work with governments as well in trying to make sure that kind of the priorities of what we're doing is understood by the government, and where possible, kind of there's government buy-in. We're not going to make a massive investment like the Lobito corridor in building that railway, or in creating a huge water sector investment if there's not government support and buy-in for that, right? So that's a big piece of thinking about an overall project and making sure it aligns. Increasingly, we're also trying to make sure we're leveraging resources of co-financing from within a country or a region. So I think that also makes sure that there's buy-in. In terms of how do we know what tool to bring to a project? Well, that's a conversation. A project sponsor or a company will come in and say, here's what we are, putting in place, and here's how we want to, finance it. And it'll be a conversation that says, well, you might need some political risk insurance in this case, or, it seems like you don't have enough debt to cover the needs, or, so we have a conversation, we look at our toolkit, we look at what other inputs are coming into this project, who's financing it, what they're bringing in, where the gaps are, and then we try to figure out where we can play a role. So it's an evolving thing. It's not you have to come in and do it one way. And that's part of how we realigned, because we used to be about the tool. So we had a team that did structured finance, we had a team that did risk insurance, we had a team that did the kind of small credit. And if you went to the wrong team, you might get a yes or a no. Now we're based on kind of sectors, and the teams will tell you what tool best fits your need and make sure that we're bringing that tool to the table.
Hi, my name is Teresa and I'm part of the MPIID program here. So my question is, because it's private capital, right? So are you looking for a higher return in terms of if you are investing in public capital? And also since this is established in 2018, it's kind of a young corporation, how do you find your like competitive edge compared to the already established large international organizations?
Thank you, good questions.
Thank you very much. My name is Prosper, MC MPA student from Ghana. I'm standing up because this question is at the center of my heart. I appreciate the fact that most of your development funding, or you take your money to where your values are upheld. I've seen in Ghana and other countries where you've held development finance support because the country or other countries are not complying with fundamental human rights regulation. I'm happy you talked about the mining sector. Currently, almost 80% of Ghana's water bodies are polluted because of illegal mining. Women are giving birth to mutated babies because of taking water polluted by mercury. My question is, we've not complied with international fundamental environmental standards in mining. Will you consider holding funding from the government if they do not take steps to stop illegal mining in Ghana? Thank you very much.
Thank you so much. My name is Brendan. I'm an MPP student. And I was sort of shocked that this agency was founded during the Trump administration, and also that you're expected to double in sort of your budget during the upcoming reauthorization. So I'm sort of curious, how has this agency been framed to conservatives? Is this a way to counter China? Is this popular with conservatives because it's leveraging private capital? Is that sort of the future of development finance when you're on the Hill, when you're talking to Republicans?
Great questions. Maybe what I'll do is I'll bucket your two questions into one answer and then your very important question. So one, how do we look at returns? I think that we look at returns across the spectrum, depending on the market that we're investing in, and depending on the project and kind of its dynamic. By and large, as a portfolio, we are solvent in that we return money to the Treasury. But as we look to do more in more low income and riskier markets, we also manage our both our interest rates and our returns expectations based on that. So, you know, there are economies where you can invest in a really important infrastructure or energy project where it's a very financially strong and viable investment. And then there are investments you can make in a very fragile market where, you know, you try to structure the deal as best you can, but you recognize that there's a fair chance that there's an amount of risk associated. And it balances out as a whole. And that is what allows us to kind of manage the risk portfolio for DFC. But I think as we were looking at our own kind of risk profile, we have moved in from where we were at OBIG to where we are at DFC in assuming much more risk. And that allows us to, in many ways, also look at our development impact in a much stronger way. And that kind of brings it back to kind of where does the political support? So I think it's multiple. I think that there's a recognition that there's a massive gap in financing for economic development, economic growth, whether it's in infrastructure, whether it's in energy space, whether, but that there's a massive gap, and that frankly, until 6 years ago, the United States really was absent from that space. I was Assistant Secretary of State for South Central Asia 10 years ago. Fatima and I were working at state together. I was in Sri Lanka. Chinese nuclear sub pulled into the port of Colombo. The Sri Lankans had really no leverage in being able to prevent that from happening. because 80% of their debt was held by China. We could go in and say, hey, this is not right, what can you do? And they're like, we're nowhere on the scene. We have no other avenue. Belt and Road was rolled out in 2013, 2014. AIIB was a group of countries coming together around the fact that the current institutions of the day were not meeting the need. Congress recognized that if the United States didn't bring an offering to the table, that we were actually gonna strategically and developmentally be behind the curve. And during the Trump administration, there was serious thought in the first 2 years about defunding OPIC. But then the conversation shifted dramatically. Congress and the Trump administration worked together to pass the bill down and take OPIC that at the time had felt like it was supporting US companies but wasn't advancing US interests, and turned it into a DFC that was aligned with US interests. So that's one big piece of it. Second big piece of it is a recognition that we're not going to be able to grant our way out of the big challenges that we're facing, and that we needed a new toolkit. And then the third is that as a development finance institution, we are more cost efficient in that sense. It's not to say that development finance should take the place of grant assistance, because there's very, very, very important needs for grant assistance. But it's that we have to have all the tools in the toolkit and use the appropriate tool for the mission. That has been supported vigorously by Democrats and Republicans. And we have incredible bipartisan support for DFC at a time when there's very little bipartisanship on very many other needs. Your question on Ghana, and I'm going to answer it more broadly as well. First of all, none of our financing goes to governments. None of our financing goes to governments. We don't do any sovereign lending. We don't do any sovereign projects. So we work with the private sector, either the private sector in that country or private sector that is investing in that country. Second of all, on the projects we do finance, we make sure that we have very high standards. And so if we're doing a debt restructuring, which we did with Gabon, a debt for nature swap, and then the government changes and there is a coup or what have you, we are bringing long-term financial commitments with full faith and credit of the US Treasury. And as long as the government is meeting its commitments on that long-term guarantee, we're not going to pull the plug on it, because the benefits to that project accrue to the nation as a whole and are invested in very strong development principles. So Congress has understood that. The White House and the State Department have understood that. And we have worked very closely with our foreign policy partners in government on addressing the concerns around governance, around compliance. But on our particular projects, we make sure that the projects are meeting their metrics, that those commitments are being fulfilled, and then we try to sustain those, because what we don't want to create is an uncertainty in the development finance in a way that long-term project finance becomes untenable, right?
Hi, thank you so much for taking the time to answer our questions. I'm Natalia Vivas, I'm from Venezuela. I'm doing my master's in public health. So it's going to be a very specific question. I'm sorry about this, but I'm very interested to seize the opportunity to ask you this. Since Venezuela has been in a military dictatorship and controlled by a drug cartel since 1998, and seeing the humanitarian crisis that has been developed from that and escalated throughout the years, and then the relationship between the United States and Venezuela has broken 10 years ago. And now, 5 years ago, the sanctions against Venezuela, the economic sanctions, it has this thing has stopped a lot in Venezuela. So for example, we don't even have an US embassy in Venezuela. So that, of course, having sanctions against a country it has its benefits and cons. And as a citizen in Venezuela, I live through it. So I'm very interested in seeing, like, now that the opposition has won the elections and the US government actually recognizes the opposition, are you considering to develop a project within Venezuela right now? How do you see the situation right now in Venezuela? Like, Venezuela is basically the epicenter of probably the biggest migration crisis in Latin America that has generated so many problems in the United States, that has generated so many health problems in Latin America. So how do you guys see that? Thank you.
I just wanted to ask, so I know the DFC leverages private capital for sustainable development goals, but does DFC also have dialogue with multilateral forums like the UNG or G20 in terms of agenda setting, like development of based on your learning, do you have that sort of?
Yeah.
Hi, my name is Alice. I actually used to work at the Nature Conservancy, so I know that furniture topic could go on really well. And then my question also pertains to that. So as more countries and, private sectors are looking away from debt, because debt is a huge problem, and are looking for debt for nature swaps or debt for whatever kinds of swaps, how do you see that being scaled, given that a lot of the projects now are very specific and have lots of different kinds of requirements and are actually pretty small in size? Thank you.
Okay, let me take those three. Look, really, heartbreaking, question on Venezuela in terms of what people, in that country have been suffering through. And for DFC, we're not yet, open in Venezuela to do financing in Venezuela. I think, strong support from the United States for the, opposition government, but they're not yet in control. And so that makes the situation very, very tenuous and perilous from our perspective. I know that there are humanitarian and other supports that may be going in. Where we have tried to play a role is that there's a large Venezuelan migrant community in Colombia and other kind of neighboring environments. So we have deployed our tools to support that community. How does that work? We have worked with both multinational and local banks to support loan guarantees that can provide financing for Venezuelan migrants or refugees who are living in these countries, to make sure that they have the ability to make a living, have a livelihood, grow their business by providing that support. So that's one way where we're trying to surge in. We look forward to the opportunity to be able to go in and support the Venezuelan people whenever that becomes possible for us. Thank you for that question. I think I forgot the other two questions, so you have to give me a quick refresher.
How to scale debt for nature?
Scale, yeah, so scaling debt for nature, and
The other one was, do you have dialogue with,
yeah, okay, those are two actually related questions, because I'll touch upon both of those. Thank you. We do work very closely with MDBs and with the UN system. One of the debt for impact things that we're talking about is working with the World Food Program on food security, debt for food security. One of the things we're starting to talk about is a debt for health. Talking to the Global Fund and stuff like that. So we're using creative tools to help solve problems. But also, what I think is really, really exciting is the World Bank is talking to us about learning from our model on debt restructuring and debt for impact, and saying, hey, some of the World Bank held debt. How can they work to restructure, to work with governments to restructure that debt, to find more money to support more programs to deal with various development needs, right? So there's an entire evolution that's in our mindset of how we're deploying these tools in more creative ways to deal with some of the challenges that we're facing, like because WFP is dealing with chronic shortfalls in their funding appeals. You know, Global Fund is dealing with chronic shortfalls as countries are grappling with, you know, surging in TB and malaria, and how do you find the resources to deal with that? So these are ways in which the DFI community and the MDB and international institutions are trying to do some more creative problem solving. And then we have like these DFI meetings, the EdFeed, and other institutions that are basically trying to do more collective problem solving amongst DFIs, so that we're thinking about how we deploy these tools around the problem set, so that we're not just kind of governed by the project that walks in the door, but we're actually thinking intentionally about the problem that we're trying to solve and how our investments connect to that.
Thank you so much. Thank you so much, Nisha Biswal. Please join me in
Thank you so much. And if I leave you with one last word, look, I think when we look at all the challenges around the world, it's really easy to get frustrated, to get disillusioned, to get cynical, to get down, to think that nothing's working, that somehow the global system is failing. And it's at that time where you need to be the most committed. It's where you have to put your head down and focus and say, okay, there's a way out of this challenge, and I'm going to be the one to find it. Right? It's not the time to give up, to throw up your hands and say it's too difficult. So we at DFC are really committed to putting our heads down and figuring out how to solve these problems. But, you know, welcome and encourage all of you to bring your passion, your energy, your ideas, and your talent to that task. Thank you so much.